Hey, welcome back to another edition of The Savvy Steward. Please remember to like this video, subscribe to our channel, and share this video as well. Okay? All right. So today we're going to be talking about choosing the right business structure. So although you may be a business owner, it's always important to know, is your structure compatible to where you are currently in your business? Do you need to grow? Do you need to develop? Are there better structures based on where you are and the amount of money you may now be making, or the just types of situations that you may have or be in? So, the first structure I like to discuss is a sole proprietorship. So, a sole proprietorship, this is a one owner business. Some of the benefits are it's very easy and inexpensive to start up a sole proprietorship. There are usually no real forms you need to fill out to actually become a sole proprietorship. With sole proprietorships, I still encourage people to at least have an EIN number and at least still have a business bank account to keep up with your records. Now, one con of being a sole proprietor is that you are solely responsible for any liabilities that are assessed to your business. So you're completely and personally liable. If someone is coming or for your business, someone is suing your business, they can also, in the event that they win a lawsuit, can also take personal assets that you own because you're only a sole proprietorship. So for example, if you have a hair salon and you're operating as a sole proprietor, and someone in that hair salon or someone's hair that you may be doing becomes infected, or God forbid, any other kinds of issue, and that client sues you, anything that you personally own, if it's a home or if it's a vehicle, any of your personal checking accounts, those are all taken into account if a lawsuit is presented against you. Okay, so that's a sole proprietorship. Number two, an LLC. I know you guys hear a lot about LLCs on the internet through different forms of media. LLCs are extremely popular. LLC stands for Limited Liability Company. Okay. Limited liability company, in the event, like we just talked about, that sole proprietor, what limited liability means is that if someone was to sue this business, they could only um, get what is owned by the business. They could not come for the owner's personal assets, just their business assets. Which is extremely important and helpful, that those personal assets are protected. Registration is required for LLCs, whereas registration is not required for sole proprietors. With registering your LLC, you want to do that through your particular state's Secretary of State's office. Okay. For example, here where I'm housed in Georgia, but of course, I do business all over the country, that our Secretary of State is Roethlisberger. Secretary of State's website is where you can go to register your LLC in Georgia. Okay. With an LLC, it's important to designate, and people ask me all of the time, how do I file my LLC taxes? So if you have not made a designation, and I'm going to get into these designations next, but if you have only registered your LLC and obtained an EIN number, you are classified as a disregarded entity. A disregarded entity means that you are filing your LLC along with your personal taxes on a Schedule C. Okay. So as you know, your personal taxes are filed on Form 1040. So your business taxes will also be filed on Form 1040, but with a different schedule if you are a disregarded entity. And you have to make an election for your LLC to either be taxed as an S Corp or a C Corp. So I'm going to go ahead and roll over into S Corp so you know about what that election entails, because you can have an LLC and that LLC be a disregarded entity. The LLC could also be an S Corp, or the LLC could also be a C Corp. So it's important to know the difference. Okay. So with an S Corp, number three, your business would pay no taxes to the government. You're still, those business taxes still are being prepared. So you still need to pay your tax preparer for filing your S corp business taxes, but the business pays no income taxes to the government. The income taxes, the profit and losses for an S corp are passed through to any shareholders. So you can be, like we talked about, you can be a single owner if and have an LLC and be an S corp. You could also have up to 100 shareholders. So between 1 and 100 shareholders on that S Corp as well. So with that S Corp, again, what the major benefit is that the business pays no taxes, but any any tax liability is passed through to the shareholders or owners of that company. Okay. So what that means is that as that S Corp is prepared, you are entering in your different income, your different expenses, deductions and credits that may be applicable to your S Corp. And if you have a profit, that profit or that loss is reported on a schedule K1. A K1 is received by each shareholder in that company. Okay. So if I'm a single owner of an S Corp, which Low Seed Financial and Business Solutions is an S Corp, that K1 comes to me, and it is either the profit or loss, the full totality profit or loss after the income and expenses, and that is applied, that K1 is taken and applied with my personal taxes on Form 1040. So it's an additional form that's filed with your 1040, that K1. Okay. So if there are multiple shareholders, let's say, for example, that profit for the business is $2,000. Okay, and you have 10 shareholders. Each shareholder would receive a K1 reporting $200. That 2,000 divided by 10 shareholders, each person is reporting 200. Now that's also the same if you have a loss. So there's a loss of negative 2,000 and you still have those same 10 shareholders. Each shareholder is now receiving a K1 that is negative $200, which is again helping them even reduce their personal income on their personal Form 1040. Okay. The S Corp can be filed on either Form 1120S, that's for the single shareholders, or it can be filed on Form 1065, which is for partnership S Corps. Okay, so that multiple or that single filer with that S Corp. One of the benefits for S Corps is that it's beneficial if you as a owner would like to pay yourself as a W-2 employee. It is harder to pay yourself as a W-2 employee if you are a sole proprietor or a LLC as a disregarded entity. You're going to want to do that as a S Corp or a C Corp. Okay. So moving on to a C Corp. C Corp, it is easier for you to raise money through investors and stockholders if you have a C Corp organization. One of the negatives, though, of a C Corp organization is that organization is taxed and the shareholders are still taxed as well through a K1. So that's a double taxation there for a C Corp. So it's important, again, to decide what structure you want to have in your business and what are the benefits, the pros and cons of having the correct structure in your business. That form C, the for C Corp, that form that is filled out is the form that's completed, the business tax form that's completed is the form 1120. So be reminded that for S Corp, the single owner for S Corp, that's 1120S. The C Corp is filed on form 1120 only, no letter. Okay. So please be reminded to go ahead and check out our website. If you are looking for resources as a business or even as someone who is just interested in learning more about financial literacy and financial education, we have so many resources on our website, our courses, our digital workshops, even some of our ebooks. Please go out and check those. Please go and check those out at www.loveserveeducate.com. Also, if you have any questions personally and you would like to complete a consultation with us, please also feel free to reach out to us at www.loveserveeducate.com. We would love to talk with you about your current business structure, your current tax strategies, and just how to best help you get to the best financial health that you and your business can be in. So thank you again so much for watching this video. Again, do not forget to like, share, and subscribe. We are coming out with a lot more content and resources to just help people to better themselves financially. So thanks again, and we'll see you on the next edition of The Savvy Steward.